Hello guys, welcome back to another trading video. In this one we're going to be doing some stock analysis on the biggest gap today, which is MRIN. We have seen actually this gap up. You probably would have seen this back in November and also a few months back, as you can see on the chart. Did provide some good opportunities back in November, or might have been late October, and then did provide some great opportunities also in July, and now we're starting to get a new movement on this. And you can see, looking, if we go straight onto a cleaner daily chart, this stock is prone to making lots of gaps, which is a bit annoying in the sense it makes it harder to say where these bounces will be. We can see that before it did fill this gap, and then obviously we got that bounce, but since then we have created a lot of gaps that have yet not been filled. So we can see though, when they do come in, it tends to get a bounce, and so that's a key pattern to be looking out for, especially on this stock. So you can see we've created a new gap. That one obviously has been filled, and that will be this 570 all the way up to around 842. So that will be that key target to be keeping an eye on now, because most likely we will get a bounce off there if we come into that level. Also, we would be likely to come down here and fill that gap. So that's a key thing to be looking at on the gap fills. Now we'll go over to the standard deviations and see where that's taken us. And if we zoom in, you can see intraday we came into the first deviation on the daily and the half deviation on the 4 hour, and that's exactly where we faded. If we switch this to a today 5 minute, or we can actually get a 5-day 5 minute, you can see the stock comes into this level and then struggles to break through, tries to break through here, pulls back before failing. So it shows us that the first deviation is holding up, so it could be likely that MRIN move has finished and we probably won't continue upward. But if we do, where do we see it going? The next major resistance will be 1225, and again we would be looking for the same thing, come into this level and probably fade down if we do. Otherwise, if we continue up, 1360 is at that next key level, and on the more extreme levels we could keep going higher. Anything above 15 I would say is quite extreme, just because this looks more like it'll be a dead cat bounce than a whole new move. As you can see, obviously, if we pull this out, we had our move here. We then had an extreme move, and so this looks more like it'll be a dead count bounce. Big move. It will put. I could see us going more to like $13 maybe, but then I do think we would fade down and continue downwards. Just because you see this pattern quite a lot on these small caps. So would it be unlikely to see that? But obviously you can never predict the outcome, so it's instead better just to have price targets. So whatever way it goes, you can have a good idea maybe of what's going to happen with it. So to the upside, any of these deviations are good, either lock-in profit areas or getting short areas, whether that's intraday or for swings. I personally only day trade small caps, but everyone's different. And then obviously we got the gap fills here at 1383 and around $1.70. So those are key things because they most likely will get filled eventually. 383 probably be a bit more recent. 172 could be a few months away. So the only other thing to really be looking at is standard deviation channels onto the downside, and that would be right around these gap fills. So 395 and 3010. Can't give any price targets lower down because you will be able to see on these standard deviations that they're negative, and obviously we won't be trading, well, you won't be able to, the stock can't go negative in value. So those are really our only good buy opportunities. I would personally be saying anything off these levels would be good, even the 571, because that is a gap, and we have seen with this stock that when gaps are filled they tend to have strong bounces, especially on these larger gaps. So that's the key thing I'd be looking out for. So what do I see happening with this? I see us filling this gap here is personally what I see. So this around, because that would line up with our second deviation of around $13.60. Fill this gap, then fade down, and probably come in to fill the rest of this gap to the 571, and maybe even push the $3 or 383 level. So that's the breakdown on MRIN. Hope that helps. Hope you see you in the next one, and that's it. Peace.